Good morning, guys. This is Ken at Tortoise Capital. This is the Q&A session for Advanced Hybrid Workshop for September 12th, 2020. And this is going to take the form of a coffee talk. There were no questions posted in the workshop, so you've given me license to deal. So I want to pull a few things together. And then I'll answer questions that emerge from the participants as we go. So I'm going to start off with this introduction to the 37 strategies. So there was historically, there's Sun Tzu in The Art of War. But this journey doesn't really start with Sun Tzu yet. It really starts with the 3 ways of thought in ancient China. I want to say the translation I read was Arthur Waley. He was a legendary China scholar and translator back in the day. And so that was my introduction to the traditions of Chinese thinking. So a young kid about between the time I was 12 and 15, I happened to read that, and not Rise and Fall, it should be I also read the Decline and Fall of the Roman Empire by Gibbon. And so that was very impressionable on me at a formative age. And to this day, a lot of the way that I look at the world is conditioned by some of that early introduction to those readings. Like, I've been a Roman Empire hobbyist, I suppose, ever since. I've studied the lives of the noble Greeks and Romans. This led me to Plutarch. And so he did this little paired biographies and more character sketches and biographies, where he would take a look at a Greek leader and a Roman leader and compare and contrast their character, and they often were, kind of similar in nature. Like, he might have, I forget the exact pairs, but it might have been where he looked at a guy like Alcibiades from Athens, who was a demagogue and a tyrant, and temporarily took over control of Athens, the democracy, because of military necessity. And he was kind of a ruthless guy. And then I think, as an example, he might have paired him with Julius Caesar, who did the same thing, ended the Roman Republic. And then he looked at what was common between their styles and character, and what led to their successes and failures and whatnot. And then this became a character study in leadership about how people respond to events. So Gibbon led me down that pathway to classical Western, philosophy and whatnot. And that led me to Socrates and Plato and the great books series and all that. But at the same time, I came across this 3 ways of thought in ancient China. I said, well, that's pretty interesting. And so he starts with the Buddha and considers Lao Tzu, the Taoist, and he talks about Confucius, the Confucian. So Chinese society, politics, literature, philosophy, history is really a study of all three of these strands of thinking and how they integrate. And so the Buddha can be understood as understanding the relationship between self and self in the world, that the world tries to shape you one way, and then you can choose how to shape yourself in order to be in the world. So this is very much an inward focused exploration of yourself in the world. Taoism is very much a relationship between self and the world from the point of view of maximum individual freedom, that it's realization of the self without fear and worry and just being joyful in the moment. And it has a mystical quality to it. So the Tao starts with Tao Te Ching is his book. It starts off, the way that can be named is not the way. So it talks about that the essential insight is that our rationality about the world cannot contain the world, that there's more to the world than can be put in our words. Shakespeare said something like that with there are more in the stars than can be dreamt of in your philosophy, or something like that. So it gets to the point that the true integrated human experience goes beyond that of mere words or words only. And there's some kind of experiential quality to the world, feelings and intuitions that cannot be contained by the construct of our word packages. So Taoism, in that sense, very much prioritizes the magical, mysterious relationship between self and the world, the direct experiential. Whereas Buddhism is really talking about what you do with that and how you are and how you think about the world, and it's about self-mastery. This one, the Taoist, is about self-experience. So 2 out of these 3 have to do with the inner person as an individual. And Confucius comes along and talks about duty. And his book is The Analects, and talks about the relationship of man and towards society. And then the 5 relationships between man and heaven. What responsibilities do we have to the higher power? Husband to wife, father to son, older brother to younger brother, and then older to younger. And so in the Confucian tradition, each one of these social encounters has a proper way to behave, a rule, and it leads to a very orderly society. And so this Analects became his documented essays on how to behave properly as a person in society. So this is the external world. And then everything social, political, religious, spiritual, philosophical, historical about China is a integration, a weaving together of these different strands. And you can see that unfold in literature and whatever. So to continue our story then, this experience of Lao Tzu and his book about the nature of things then inspires Sun Tzu, legendary general, to write The Art of War, which has a very Taoist tone. And it talks about, its most famous point is the greatest warrior is the warrior who wins without fighting. In the same way that the Lao Tzu would say the greatest leader is the leader who does nothing but through whom all things are achieved. So there's a very paradoxical style to those pronouncements. So the art of war represents the top level philosophical approach to that whole element of warfare and whatnot, but it has a very mystical flavor to it. It combines with Confucianism to talk about justified use of military forces towards the proper social ends of the duly constituted government. And so if the emperor has the mandate of heaven, meaning that he is aligned with heavenly principles for the good of the people, then the use of military forces will be done properly. And then Sun Tzu talks about how to do that properly. So if that is the philosophical basis, there's a derivative book called The 36 Strategies, also written by Sun Tzu and some of his followers. And this is more of the how to turn those principles into action, the 36 strategies. So it's nice to say, yeah, the greatest general is the one who wins the war without fighting. Yeah, but how do I do that, Sun Tzu? What are my principles? So the idea of the 36 strategies is that you have this top level art of war, and then the next level down is the 36 strategies, which gives you that connection to specific tactics of what to do in a particular situation. So 36 strategies is that connecting gearbox, if you will. So in my in my personal development, then, so as a trader, I would say would I have sort of like a middleware just to show you how powerful those influences are. So we have the 7 swing strategies, and these are rule sets that can be traded mechanically and robotically, if you will, right by the numbers with absolute machine-like precision. And that would be like 5-day down, channeling, overreaction, 551W, the washout. I'm missing one there. 5-day. Oh yeah, triple screen. I guess it's 6. And then there is a bolt-on module to those called the continuation pattern. And so taken together, those represent a set of swing trade systems, purely mechanical and rule-based. Well, derivative of those and in support of those are a set of strategies, which we relax the criteria of the mechanical systems. And so these are more of guides They describe an approach that gives flexibility and discretion to suit yourself, to fit it to your own circumstances and needs. And so taken collectively, I thought there was a seventh one, I guess. Yeah, the seventh one is the continuation pattern, which is also mechanical. So taken collectively, this represents swing trading systems and strategies together constitute swing trading. In hybrid trading, these swing trade patterns and systems can also lead to useful tactical day trading. Because all of these signals generally are giving us information that the market in the swing trade time frame for the next 3 to 5 days are putting us in a position where we can expect directional moves that are large. And so if you knew that and you started seeing that unfold, that could lead you to picking a target that has a greater probability than normal of trading large in one direction that day. And so the combination then of swing trading and day trading gives us one of the ways we do hybrid trading, because we share information and techniques. These fractal techniques work on all the time frames. So a particular pattern, when we frame a trade up here, looks just like the way we frame it down here and implement it. And the only thing that's different is how fast the decisions come. At the higher level, those core trading strategies that we use that are looking to operate on the monthly basis also can be, they are also fractal in nature. And so you have this relationship now between core and swing and day. Each one is its own self-contained body of knowledge, but also are contained in a larger collection of hybrid trading. So you can see that we've gone from very specific rule sets of how to do things with precision to an expanded set of strategies, and then looked at those strategies in multiple time frames. And then there's a body of knowledge that, that ties all of these things together. There's some kind of common standard practice. So in the evolution of my writing and teaching, then I started listing what were those common general support approaches, good things to do that were useful in all of those dimensions, and including some support functions. There are things about self and psychology and health and fitness and learning and documenting and record keeping and organizational theory and systems thinking. These support functions improve and leverage the trading, but they're not trading them directly. But if you invest time and effort into your learning styles and learning process, you're just going to be better at all the trading activities because of the discipline of the mind, the self-development, and so forth. So there were a bunch of things that came out of these support functions. And once I started listing them, I was going to do the top 10 things to do to support your trading of any type. And once I started making the list, that grew to be 37. And then once I started, the second round, that 37 has now grown to something like 46. So I just kind of laughingly call this the 37 strategies, because the art of war becomes, in Chinese tradition, the 36 strategies. So I'm going to give you +1, the 37 strategies. And then just because of things, there's really 46 strategies in the 37 strategies. I think it's 46 or 43, but it's kind of a growing project. So what I'm about to cover is I'm going to start going through the 37 strategies document. And what it's really going to talk about in the initial phases, especially, are some of the support functions and attitudes. I guess some of the craft knowledge that I've learned along the way by trading and teaching and writing. Things that are going to cause no harm, that are going to support any or all of the styles of trading that you might engage in using my materials. It'll help you see how things fit together, and there'll be some good habits of mind and whatnot. So that's sort of the background of this. And the reason that I think it's valuable is that if you look at the tortoise body of knowledge, BOK, body of knowledge, other guys that are also experienced traders have sort of taken that material and adapted it to their own purpose. And so there's a relationship, but there's also an evolution and an extension. So one of the things that you get in a learning practice, a learning community of mutual supporting traders, is that the materials, which start with some principles and approaches, end up manifesting in their own way for individual traders. And then those guys tell their stories. And then as a consequence of that, the body of knowledge expands and becomes really a toolkit. There's really almost a tool room. There's individual toolkits, and then almost a group tool room. So that's how we handle maintenance in the Army, is that we issue mechanics. They're walking around tools, but then we also have specialty tools in the tool room for some of the larger or harder or less frequent functions. We can't give everybody a common number one toolkit, so we keep a tool room that you can sign tools out of as needed. So, we call it common number one, common number two, and that gives us the ability to do all of the trading or maintenance functions that we need. So if you think about the way our body of knowledge expands, it has to do very much with this learning new techniques and talking about it and checking each other's facts and results and doing peer review. And then the body of knowledge expands because of the contributions that individual members make, and then it gets tied together through our principles. So one of the real smart guys we have is Bob, who is my spiritual sensei and trading mentor and fellow traveler. And so he and I do coffee talks daily and weekly, just about what we see and what we do. And a lot of Bob's ideas have shaped the particular strategies that I use. And so I'm going to show you now 3 things Bob shared with me to think about. And so he sends me a chart. I look at it and try to make sense of it and what I see. And then in that dialogue back and forth, we end up refining things. So a lot of the things that I do now that work are because of this very interesting set of ideas and questions and critical thinking that goes back almost 20 years. Like the MACD histogram and the 4 seasons comes from some dialogues he and I had about how can we take the complexity of the RLCO Bollinger Band and all the little details and rules that are in there. How can I neck that down into a something that's easier to see with the normal flow of seasonality in the marketplace. And so MACD 4 seasons says, oh yeah, winter, spring, summer, and fall, with these things as turning points. And with the crossing of the zero line marking the change of the seasons, and then the change in the slope marking the change. So we have winter from crossing the zero line down to the point where it no longer goes down and starts going up. And now we have the spring, summer, fall, winter, spring, summer, fall. And this works in the world of volatility, every time frame. So when you look at the risk Z, where we take that Z score, the Z index, and then we express it as a Z score, and then we can see the seasonality of volatility. So we know that when volatility is spiking, it's winter time for price until the volatility no longer can spike and starts to go up. So it'll still feel horrible, but you can actually see the evidence of volatility declining. It turns out that the spring is a great place to start making those initial entries. And if you go back to looking at March of this year, when we started to get back into the marketplace, it was because the risk Z was giving us some information. So this whole 4 seasons approach, the cyclic nature of market behavior, is kind of a strategy, and it comes out of the dialogue and information storytelling, critical thinking, creative thinking exchange between two guys who are tied together by a lot of similar principles, but who each brings their own experiences and then engages in inquiry and dialogue together. And so the 3 charts I'm going to show you with Bob are examples of exactly that kind of collaboration. Well, if you look at the small working groups in the hybrid trading workshop, those guys have, like Worth and Eric, these are guys that are coming together that are united by the time frame and the habits of mind and the styles that they like. And so they get together and share weekly conversations, and they become each other's accountability partner. So they didn't even need me to do that. They just have some tortoise material, and then they create their own working group. And that's one of the ways in which work gets done and the body of knowledge expands, because they report back, and then I can give them coaching or observational commentary. And so now we have a rich dialogue going back and forth, and then their example is documented in Basecamp, and then that becomes a way to inspire others, and also a way to share their information through the learning infrastructure of Basecamp. And in that way, that becomes like a group tool room where you can see the work that others have done and start with where they stopped and leverage the work that's already been done. So you don't have to invent this stuff yourself. So that's what I want to say about that. And that whole style of collaboration is a strategy. It's one of the 37 strategies, I'm going to bet. So let me shift and talk about something actually useful. Hopefully that was useful. Where did I put that darn? I thought I had opened the, I guess not. Let me try to cue his stuff up again. Boy, maybe I inadvertently closed the, So the first big idea is the 9-day study that Bob likes to do, and I think I briefly showed that in a previous session. And here's one from Jim Carroll. So Jim's another one of the founding members of our Tortoise Advisory Council, who's come to the annual research weekend and shown some just brilliant strategies using volatility, and has been a great friend of the team and a great contributor with ideas. Both of these guys are pro money managers for decades and have a lot of great insights. So we were looking at some commentary from Zero Hedge, which is a iconoclastic outlier. And so Jim said, hey, one of the things that you can do is just simply put a 3 ATR band around price. So when you have price moving up in a normal condition, when you have it moving up in a normal condition, you can have this bullish move, and you can see it moving along with the Bollinger Band mean. But when you get to extreme conditions outside the 3 ATR band, when price gets beyond that 3 ATR envelope, that's quite often the extreme move, and then you get this correction, and then it just gets back to normal, the normal grind, and then you get, like we had recently, that move beyond 3 ATR, and it makes this correction back. In the same way that you can see so percent price oscillator operates much like MACD histogram, but it works on a percentage basis instead of pure price, and you get these extremes. And so he uses the Elder force ratio and percent B, which talks about the stretch between Bollinger Bands. But in every oscillator that's worth its salt is going to help you find these critical turning points because they're all derivative of price. And this connects very strongly to our idea of in the RLCO framework, where we're using 30 period look back, and we look at 1 standard deviation, 2 standard deviations, and 3 standard deviations. That if you have the Bollinger Band mean and then a directional move, the river gets wider at Z1, the floodplain gets wider at Z2, and then the extreme outside condition, which we normally do in red. When you get price that has moved up beyond Z2 and gives us those 2 little dragon horns, that's the alert that this thing has not just been grinding, but has gotten to an extreme stretch, and it can't maintain that rate of stretch forever. Rubber bands are not unlimited stretchable. And then the snapback correction can come back all the way to the Bollinger Band mean and not be surprising. And what we've seen at this time is it's already come back to Z minus 1. So it's given you almost a 4 standard deviation move. So one of the things that we're noticing is that this is not just an anomaly of the RLCL framework, but this is something that you can see in any kind of oscillator of choice, whether it is percent B, which studies the stretch between the Bollinger Band means. So in this case, it's looking at the standard 20, or the force index, or a MACD derivative using percent. In every case, we're trying to understand the difference between normal grinding bullish behavior and this exceptional parabolic kind of run that can't be sustained, that represents everybody moving to one side of the boat, or everybody moving to one end of the teeter-totter. There's nobody left to sell, or there's nobody left to buy the thing, nobody left to sell to, and all that is left is a correction when people start preserving their profit, and then that creates momentum to the downside as everybody worries they're going to lose all their stuff. And so you get these momentum-based surges at the end of a normal grinding move. You can see these surges followed by snap recoveries to get it back to something like the previous normal. Well, these exaggerated moves are abnormal. So we want to be able to identify with market classifications times when the markets are abnormal so that we can apply the standard work of handling abnormal markets, which is different than the standard work for handling normal markets, which we talked a little bit about yesterday. And this whole week has been about that as we suffer through an abnormal market that now brings things back to long-term normal. So this is Jim's contribution to show that really there's nothing magical about RLCO or MACD except in the magic that you make through skilled use of a tool, but it's really a feature of what oscillators do. So there's things that will tell you about trending behavior, and it tells you about the strength of trend and the direction of trend, and that's fine. But then there's also oscillators that talk about trading between highs and lows in a larger cycle that help you find the differences or the turning points in cyclic moves. And so between trend following and sector cycling or price cycling, you get an understanding of both of those. You know, what's the height of the water, and then what are the waveforms like? You got to understand both of those if you want to understand the ocean. You know, it's the nature of water. So that's one of the coffee talk items. Here's one from Bob. And this idea is now looking back over long periods. And the title of this recital is What Happens When This, he's using a modified MACD. He's using an 8-period or he's using a 430 moving average MACD with a 5-period moving average, and then the Bollinger Band mean that he's putting down here, this Bollinger Band mean is a 30 and a 2, and then the smaller one, this one, is an 8.5. So he's using a variety of adjustments to fine-tune the basic approach to seasonality in a way that makes sense to his time periods and time holdings. He's a money manager, so he has to emphasize more of the longer-term swings for his clients. And so he's adapting these tools as a way to tune it to his time frames. Well, what he is looking at here, so he's drawn this red box that under this setup that you have a crossing of the zero line here, followed by a sharp move, a turning point when winter becomes spring, and then when it crosses into the summer. So you can see that he's kind of grouped this whole winter and spring and said, hey, what happens when that thing is below the zero line? And if you just said this, you would say, oh, that's noticeable. That is noticeably different. This behavior doesn't look like that behavior when it's above the zero line. And it doesn't look like this stuff when it's above the zero line. One of these things is not like the other. When it's above the zero line, it looks like that. When it goes below the zero line, not only is the behavior different, but you got warning in plenty of time to avoid that or to exploit that. Then I would just add, when you notice the changing of the season, you also get some interesting information like the PSAR flip, the RL10 reversal, winter becomes spring. So there's things you can do to optimize this is the abnormal time. So the changing of the seasons here is a lot more important than it is up in here, where a lot of times things just kind of blend into each other. I mean, there was a little bit of a correction here when summer became fall, but that little sell-off doesn't look like that sell-off. This is a normal correction that came back to the Bollinger Band mean and then recovered. This one came to the Bollinger Band mean, tried to recover, but then failed big. So now suddenly, price with respect to the Bollinger Band mean is an important consideration. That's why we can say, coming out of the hole here, until it got back to the Bollinger Band mean, this was leg one. And then it didn't fail. Instead, it continued to grind. So this is like leg two. And maybe this is even leg three. So if this is leg two, recovery, and then this might be leg three, we can now see that there is a qualitative and quantitative difference in price action simply reflected in, is it above the zero line or below the zero line? So you don't have to spend a lot of time squirreling around up here. You can just look at the simple indicator on your dashboard and say, where is the MACD with respect to the zero line, and use that to condition my market directional bias, standard rules for grinding bulls. Oh, abnormal times activate the Avengers and take advantage of the large directional moves and the enormous volatility until things get back to normal, and then adopt the standard work for normal times. And that's what happens here, and that's what happens over here. So I say all of that so that we can take a look at the other tactical signal that Bob sent us info on. Trying to erase the ink here. All right, we'll do it the hard way. So now when we look at his original point, when it crossed the zero line, we didn't know it was going to do this, but it has to cross the zero line first before it collapses. Here was a moment when it came close, and that was triggered by this little pullback, but then you got a double bottom that held support at the Bollinger Band mean. Is it going to collapse? Well, no, it didn't, because of reasons. And then you get another leg up, and now here's that extreme reading again, out past Z2, alert. And now this little correction that we've experienced here, notice the PSAR flip, hasn't even come all the way back to the Bollinger Band mean yet, but this isn't a bear market. This is just a correction inside a really strong bull. But it could come back to the mean. I mean, it has before. It could this time, and there's another minus 7% waiting in here to get it back to 310. It's at 335. So that's another $25 just to get it back to fair value. and the Bollinger Band mean. And so this little warning at the 0 line now says we are in a critical state. Critical state. And we know that the election is coming. So there's just going to be more chaos coming because that's the nature of it. So if there was ever environmental conditions that could lead this to be a collapse, this is certainly a moment where that could happen. So that tells us right on the edge of normal and abnormal, you've got to be prepared to make that shift in rule sets and mind state, because it takes a different mentality and different strategies and different systems to deal with a market that's doing that than a market that's just going through an ordinary correction. Right now, it's just an ordinary correction. But if we look at the when we come back and look at the daily, as we talked about yesterday, just to put this into useful tactical perspective, here was our extreme stretch. You can see where the Z2 line has been controlling all of this price action until we get this exaggerated move, abnormal, and then the collapse occurs. The dragon couldn't stop it. The Z1 couldn't stop it. The Bollinger Band mean couldn't stop it. Now it's resting on Z minus 1. This is the normal channel here between Z plus 1 and Z minus 1 with that spine of the Bollinger Band mean of the river right there. So it's right on the verge of falling out of the river. And then there's Z2, and then Z1 would be down here, and here's that long-term fair value. So 310 is way down here. This is the 10% sell-off, and this is where it becomes officially a correction. So all of the talking heads will say, oh, all of the sell-offs that are less than 10% is just normal noise. But they really act as if a 5% sell-off is noise, and that this is what they treat as a correction so that they can be postured. They already want to be out when they start telling you, yeah, you should start worrying. They already want to be out. That's what talking heads do. And our strategy these past couple of weeks is once it got to be an abnormal move, we were even tighter than that. We were using 1% stops because that's what we do when things are abnormally good. Things are abnormally good. That's when I tighten my stop up to 1% or 2-day low in order to preserve more of that abnormal gain. So that's what the tactical chart looks like. And when we look out at Bob's work, this configuration of MACD is saying, hey, this doesn't happen all that much. Here's a time when it held support and then continued on to greatness. If that were to happen now, price would get back up to 350 and 360 if this support holds. But if it doesn't hold, it could be one of these things. And I think he's got this I think is a 200 period moving average, 200 DMA. Even this one approached it a little bit. There was a little bit of a sell-off here, but that didn't collapse. In fact, it went up. And so failure to fail further tells you this stuff is good. And then there's the PSAR flip that tells you it's going back up. Here was the PSAR flip that told you it was going back up. So you start layering these little guideposts together, these little indicators. It's like tracking a wild animal. They leave marks in the snow, and they have histories of performance, which you can use to estimate the psychology of the herd animals that are pushing this thing around. So the zero line in Bob's formulation and the way we trade it in MACD Four Seasons is significant because of he uses an accelerated a 430. This gets to the zero line faster than the one that I use, which is a 1030. I use the 1030 because I'm more interested in the cycling. He's looking more at the larger turning points and needs to get an earlier alert so he can start unwinding longer term positions. So which one is correct? Well, each one serves a purpose for the toolmaker who's trying to achieve slightly different effects. So this gets back to my point that you can have these core principles and core strategies, and then these derivative ideas around the core principles, which share some common insights, and then you get this expanding body of knowledge like a tool room, and then this community of practice can learn together as we grow and as we go forward. So that's the second one Bob did, looking at the zero line. So that has to do with market conditions and market health check, I suppose. This one, he's using the same MACD Four Seasons to look at let me scale that back so you can see the settings. And so when we're looking at Mexico, Frog Champion, which means it trends intraday and on swings. So that just makes it a great cyclic trader. And what he's noticing is not just the crossing of the zero lines, which we just looked at. Notice that crossing of the zero line here led to this one didn't cross the zero line, and that leads to an up move. So failure to fail. This crossing led to an up move. So what he's noticing now are these turning points here, where the downward slope of that signal line starts to curl up and now gives you the ability to find the transition point and start front running these larger moves. And so we're still early in Mexico's. So Mexico and Brazil both had better performances over the last 3 days than the S&P. The S&P has been selling off, but this one tells you, there's a difference between Mexico and Brazil right now versus SPY. How can you detect that? When you see that it doesn't fail further in these little regions, and you can see it's actually starting to follow through. And when it follows through, this gives you like 10 days of swing performance, and we're only 3 days into that swing performance. Here was 7 days. So there may still be time left, but the larger point is that you should pay attention not just to where it crosses the zero line, but to those moments when the slope changes at the bottom and the top of these waves. So this is the characteristic of oscillator movement. So, coffee talk from Bob and Jim. 4 different ideas about what I would call market classification, market timing, and sector cycling, and the use of oscillators to fine-tune your understanding of price. Particularly effective on the larger indexes, which represent the blend of a lot of different time frames, a lot of different sectors, a lot of different strategies being expressed in these indexes. So they are more characteristic of large herd behavior than, for instance, an individual stock. Okay, so that's what I wanted to say about this. So here we are, an hour into this thing already. Where does the time go? And I can hear the oil bubbling upstairs for the birthday dinner. So I want to cover the first opening strategies of the 37 strategies document. Yeah, so we are at 46 on this already. So the very first one, hey Ken, I need you to tell me about strategies for trading and systems for trading. And so the very first one, the zero step, the zero strategy, is the learning journal. So you can think of this as the novice approaches the craftsman and says, hey, I'm excited about learning how to carve wooden bowls. Can you teach me how to carve wooden bowls? What do I need to know? And then the craftsman, and he's expecting, he's going to tell him here's how you hold the wood and sharpen the knife and all that other stuff. And the craftsman says, first, the zero step, the first preparation step, write everything down. In your learning journal. The most important thing. Step zero, to be prepared for that journey of 10,000 steps, get you a learning journal and prepare so that on every step along the way, every next trade, every next event is really a roundabout that you enter and you take some action and you're going to reflect on it and you go around and around learning until you're ready for the next journey, to the next roundabout. So every one of these little trades is really an opportunity, a self-contained experiment and an opportunity to learn. And the things that you learn from those reflections, to lock that in, is your learning journal. So that, like Sisyphus trying to push that thing up the hill only to see it fall back, he didn't have a learning journal because he was pushing with both hands. But if you zoom down into that, what Sisyphus didn't have was a wedge to keep that thing from backsliding. And then the very weight of this thing exerts downward pressure onto the wedge, which keeps it from sliding backwards. So if you want to climb the hill, you got to use a learning journal to put those little wedges in so it doesn't backslide. So push when it's time to push, learn when it's time to learn, lock it in with a learning journal and share that. Each one, teach one. And now you get that 4 ways of learning: the propositional, the theoretical, and then then the experiential, the learning from doing. You got to trade it forward with skin in the game so you can see what it's really like. The best model of a cat is another cat, preferably the same cat. Experiential learning, learning by doing. And then presentational knowledge. And that's the knowledge that comes from you trying to lock it in and then trying to teach and share other people. It's when you talk about what you're doing. The learning journal is a dialogue with your other better self. Writing is thinking, and thinking is hard. And so when you write those thoughts, you get them out of the subconscious and the unconscious, and you bubble those up to the surface to render them down into words that you can study with your better self and your reflective self, and you can think about what those words mean and why did I choose those words. And then when you have dialogue with others, they can talk about the words you wrote and what did you mean when you say that. And in that dialogue, you continue to go up the mountain. That's what the learning journal is like. That's what coffee talk is like. And presentational knowledge is the knowledge that's available to you only when you try to teach and when you try to speak and when you try to write about it. When the act of communication forces you to adopt another person's point of view and then to find the words that allow you to share understanding, and that gives you a different insight into what you're talking about. So presentational knowledge is available to you only when you share. When you ask good questions, you are actually learning about the limits of what you know and understand. And you're learning about your own courage in asking questions. And then you're open to the possibility of an answer. And the questions that you ask that you tried to answer gives you skin in the game. That's your initial investment in the meaningfulness of the question. So if you ask me a question and you haven't tried to answer it, I'm probably not going to answer it. Or if I do answer it, it's not going to mean anything to you because you don't have another stone to grind against. Iron sharpens iron. So when you have skin in the game and you try to answer your own question, now the answer that I give you gives you something to compare and contrast, and that's how you're going to get better. So presentational knowledge is part of that. And then finally, the practical knowledge that comes from repetitions, doing it once, twice, 3 times, 100 times, or as Kim Anderson tells us, 600 times is what was needed before she could really make that difference. That's what craft knowledge takes. Repetitions to where you can get to, I'm unconscious and conscious. I'm unskilled and I'm skilled. So I start off here, I'm unconsciously incompetent. I don't even know how bad I am. And then I become aware I am consciously incompetent. I now can see the shortfalls, the shortcomings of my performance. Why? Because I studied my performance. And I realized, oh yeah, that's not up to the standard. And then through application, learning, and effort, I can become consciously competent. I'm now, through active thinking and behaving and awareness, I am building the skills that I'm conscious of what I'm doing. I'm thinking about what I'm doing. And then through repetition, I can get to the highest state of unconscious competence where I've internalized it to such a fact through so many repetitions that I just get better and I'm learning things without even being aware of it. But if I'm not aware of it, I'm actually learning things below the level of consciousness. And maybe there's some good things that I'm learning how to do, but maybe some unskilled practice corners are, and there's things that are in, there are things I'm learning through unconscious behavior. I'm getting set up to learn some bad things. My overall net performance is going to be a sum of all of those things that I'm learning at this unconscious level. And it's only by taking the conscious mind and going back and studying those events I can say, oh yeah, those are the errors that I'm making. And if I can eliminate those, my performance is, instead of being this, is going to go like this. Instead of gaining and then losing and then gaining and losing and suffering in here, if I can learn through reflective thinking about how to tighten up the ship, I might be able to get something more like a steady, smoother equity curve. That's the knowledge that comes from practical thinking, practical learning, and then studying that in a formal way, applying it into principles, putting those principles into action, telling people what those are, and getting feedback from trusted others and myself. And then that becomes more repetitions, and now I get this virtuous cycle. That's why lesson number 0, the learning journal. The most important book on trading that you'll read is the one that you write, the living document that develops your ideas and commits your understanding to writing for further self-study and reflection. And this is where I'm going to, for sharing with others. Each one teach one. What do you think about that? Version 0.91. That's how we do that. So the 36 strategies, the Chinese martial classic that derives from Sun Tzu's Art of War, which derived from Lao Tzu's Tao Te Ching, which is one of 3 ways of thought in ancient China, which represents an intellectual tradition of 3,000 years, co-equal with Buddhist thinking, Confucian thinking, which collectively encompasses your relationship with self, your relationship with the world, and your relationship to society in the world in an organized, comprehensive way. A hybrid collection of those represents a fully integrated person, in the same way that hybrid trading represents the integrated trading that comes from day trading, swing trading, and core trading, informed by a set of common principles that we learn through our learning journal and share with others. That's a pretty good one for the day. That's pretty good. I'm going to go eat some breakfast. Birthday cake. I'm going to have birthday cake for breakfast because that's how I roll. That's what Lao Tzu would say is, when you eat, eat. You want to eat cake? Eat cake. Deal with it. Tomorrow's another day. So thanks a lot for your kind attention, guys. I'll get this published and posted along with last night's video and get it posted. Let me just double check the question list. Yeah, I was a little rough this morning. I didn't have my tea for breakfast, but through speaking, we got it done. Let's see, other questions that were in there. There was a question on propositional, experiential, presentation, and practical are the 4. And I think that there was a question about, the difference between a correction and a bear market, a sell-off, a correction, and a bear market. I'll say it this way. Let me find that little. And I'm almost capturing it with these big vertical red lines in a sense. It's this idea that if you have some kind of peak price up here, that 10% in traditional talking heads is the marker of a correction, and that 20% is the boundary of a bear. That's when when it has sold off 10%, they will say, that is now a correction. That anything less than that is just noise and normal give and take and cut and thrust and cycling as part of a larger bullish move. That's just normal oscillation. But if it hits that 10% barrier, say, market's corrected from the exaggerated price, now we say, that has now corrected back to fair price. What they really start thinking about lately, I think, my hypothesis, is that 5% is what they now think is a correction, because times are faster and there's quicker trades. So they tell the public, it's noise until 10%. In their mind, it's really at 5%. They're thinking like a correction. So halfway up, that is 2.5, which now puts my rule of about that 1% when we have the excess gains. That 1% is really, I'm not waiting for the talking heads to tell me. I've decided that this thing is abnormally good. So you might think of just noise, correction, and then a bear as being the types of sell-off. It's just normal sell-off and go. A big correction and then buy on dip. And a bear says, look out below. So when this started selling, this is where we got out. To me, the bottom of the dragon is that's the correction. This thing, the dragon and the PSAR keep this thing on the right side of gains. And so this one, and then the Bollinger Band mean, and then the bottom of the river. So I do this maybe in a little more refined layers. That the Z-score ladder matters a lot to me. And then, as I talked about last night, there's a real beauty in the weekly. Look how nice and clean the weekly Z-score ladder works to establish boundaries. Z3, Z2, Z1, 0, -1, -2, -3. And then this whole range of normal inside here, which is the average plus or minus 1 standard deviation. That's the range of normal. And now you have like abnormal 1 and abnormal 2. It's not unusual to see it come out of and then it beats feet back into the normal. So that's sort of like abnormal 1. If it gets above Z2, wow. And then if an excursion beyond Z3, earth-shattering. Then notice how that rapid correction to recover. Yeah, the world's not going to end. That $15 trillion promised by the Fed to prevent further. That's what $15 trillion will do for you. Ain't got many more of those left, though. Okay. So, there you are. I think that answered hopefully that answered the questions. Yep. There you go, Joe. James Heron talks about Kropotkin Mutual Aid. I'm not familiar with that, so now I have something to read this afternoon. Kropotkin Mutual Aid. Kropotkin Mutual Aid. I'm thinking that's going to be something like a Russian-based mutual aid, mutual support society for the benefit of the people. That's going to be my guess. A Russian anarchist. Same difference. All right, guys, take good care, and we'll see you. I'm going to go eat some breakfast birthday cake.